Hey guys, in this episode, we've got Jonathan Caudill from Farm Bureau from Mebane, and he's going to tell us a little bit about himself, kind of share some of the details, some stories, things that he's been doing in his business. So stay tuned.
Hey, welcome to The Buzz, Coffee and Real Estate. We've got a super special guest today, Jonathan Caudill, and we just wanted to jump into some insurance. This is an area that a lot of people don't know a lot about when it comes to buying a home. We're right in the middle of a buying a home series and what you need to know. And so we really just wanted to pick Jonathan's brain a little bit today and figure out kind of what he brings to the table when it comes to looking for a home, shopping for a home, going under contract, and closing. So welcome, Jonathan. Could you just tell us a little bit about yourself?
Absolutely, Cameron. Thank you guys for having me. My name is Jonathan Caudill, Farm Bureau Insurance. I manage an office in Mebane. And with Farm Bureau Insurance a little over a decade now. It's kind of aging me really quickly. I'm married. My wife, Keela, and I have 2 kids, Cooper and Shay.
Okay.
And we reside in Mebane. And we have lived in Mebane for, about 15 years now.
Okay, so you've gotten to see all of the dramatic changes going on in Mebane.
Yes, and it continues to change, absolutely.
Yes. Yeah.
Well, so Jonathan, you started in like Winston or something, didn't you? So you were making the drive from Mebane to Winston like every day?
Yeah, so I put a lot of gas in a little Nissan Altima at that time, but I did. I commuted from Mebane to Winston-Salem for about 4.5 years prior to managing the office location. I did, yes.
I know your pain. I drove to Winston when I worked at Truliant, and I was there 4 years doing the same, and I was driving back and forth to Haynesville Boulevard.
But you were Burlington,
I was
so
in
you
Burlington.
were 10, 12 minutes closer.
I was a little bit closer, yeah.
Yeah, I don't know how much difference that makes. 'Cause it's still a lot, but yes, I did that for 4.5 years. Glad to be a little bit closer on the daily drive into the office.
Wow.
Oh, well.
Wow. So we just did a podcast last week where we talked about, like, before you ever step into a home to tour a home, here are some of the things you need to jump into. Here's, why are you moving, getting pre-approved with a lender, connecting in with a realtor, all those sorts of odds and ends. So if we're talking insurance, home insurance at this point, what would you say along that kind of initial process of connecting in with an insurance agent?
Well, I don't think you can get into the process too early. So the earlier is the better, because collecting information, get a little bit of personal data, those things out on the front end can help with speed and efficiency on the back end.
Okay.
Because once you decide on a home and you make an offer, you go under contract, and you're in your due diligence time period, part of that process of getting to the closing table is getting an insurance binder to that lender.
Gotcha. Yeah, and I know many times we've had the lender reach out and say, hey, I'm waiting on the insurance binder. I can't do anything until I have that.
That's correct.
So when we use the word binder, like, I'm thinking a 3-ring binder from Office Depot. Help me understand what the word binder means.
A binder is simply this. It's a document showing that when the client goes to the closing table, they have appropriate insurance in place. And what that's going to do for that lender is going to make them feel comfortable or satisfy that requirement of the insurance is in force on the lending that they're making on that property.
So just to explain a little bit, if we're thinking about a mortgage lender,
Sure.
they're giving a huge chunk of money on a house, right?
Absolutely.
They want to make sure that house doesn't burn down a week after closing, and then they can't get their money back.
That's correct.
So you would have to have insurance anytime you have a mortgage on the house, at least covering the amount of what they feel like it's worth. Do you need insurance if somebody's buying a house with cash?
I would strongly recommend that, yes. That's a great question. Otherwise, you're self-insuring it.
Yeah.
Right? So you're running significant risk, so why not have a good insurance company, a good agent, take that risk away from you, take that off your shoulders, right?
So let's ask that question. If I have a cash, let's say I buy it cash, because the lender's going to require insurance.
Right. Anytime.
However, when you're a cash buyer, you kind of have some choicing.
Yep.
With that being said, would you say that the risk involved is, okay, what happens if something happens to my house and I'm uninsured?
Well, there's 2 parts, because you're going to have physical damage coverage. You're going to have coverage on the structure itself that you're self-insuring, but also things that people don't think about sometimes is, what about the liability aspect of that, right? Insurance policy also provides liability coverages. And so not only would you be self-insuring if you chose to do so and not purchase an insurance policy, you'd also be self-insuring that liability. And that could have dramatic impacts on your overall personal risk, right? Your assets, things that you've worked your whole life for.
So we're talking about, like, let's say a house burns down, everything inside the house.
Contents, absolutely. Structure, contents, those type things can be, very costly to replace. And That's the principle of insurance 101, right? Having appropriate insurance in force, gives people peace of mind.
Mm-hmm.
And that's why you buy that in hopes of, if this happens, hey, I've got a company, an agent that's willing to come in and take care of that for me.
Yeah, that's good.
Well, and I'm not going to ask you for any quotes because that's impossible. We don't have a property. We don't have a value. We don't have, any of that. But I'm just giving, personal example. We're talking, you're protecting a 200, 300, 400, 500,000 asset basically for a couple of $1,000s a year. Okay.
Mm-hmm.
I mean, again, the higher the price point, the more the insurance company's going to have to pay out. So of course, the higher the premium, but that's very, very low percentage-wise.
Oh, yes.
To have everything covered, protected, and we're talking, when you say liability, we're talking medical bills, somebody is in the house, gets injured, all of those sorts of things.
Yep.
So it feels like it's just as whether you have a loan on the property or not, you're protecting your largest asset.
That's right.
And that's very much worth doing. I mean, you're going to ruin your financial picture. Things, like you said, you spent 10, 20 years working on, and all of a sudden, it's down to zero.
That's exactly right. Banks lend money based on your ability to repay. They're doing that over a loan over 20 or 30 years. So they know that the investment there is significant. If banks, will require an appropriate insurance policy to be enforced, clients should as well too. People buying the home.
Yeah,
right.
Makes sense.
A smart financial decision for sure.
So, I'm gonna throw this to you, Josh. We get it. We've got the appropriate foundation in place, right? People have their wants and needs set. They've gotten pre-approved. They've touched base with a good real estate agent, good lender, good insurance guy. They've shopped homes. They see their third, fourth home. All right, that's awesome. So what would you say at that stage of the game regarding insurance? I mean, because part of it's like, well, we need to make an offer.
Sure.
But I mean, you kind of take that ball a little bit as far as what your perspective would be on that with Jonathan.
Sure. I think the biggest thing is anytime that you have a buyer, their biggest conscious moment typically is payment. How much is it going to cost me? And so, and I mean, you can vouch for this, certain houses in certain locations are going to cost way more than others. You may have something that's outside of like the fire. I think we talked about this, like a fire station's not close by, it's really far out. So now you're putting into a more riskier time frame of if you had a fire. So you pay more. Like me, I'm 2 minutes from a fire station, whereas Cam may be what?
I'm probably 10 minutes from a fire station, So, and it's like the one, F-250 fire truck out where I am, out in the middle of nowhere. So
I think that's a pivotal piece is if we're looking at payment, we can give an estimate, but at the same time, the estimate's not going to be exact. So if somebody's super conscious on payment, then making sure, hey, let's talk with them. Let's send out, hey, what are we looking at for this particular house? Is there any red flags, anything that's extra, anything that's going to cost me more because of the location or so forth? And I think those are going to be pivotal. And then making sure that you have pretty accurate payment amount. Because I mean, I've had it where, the estimate that the lender gives me, let's say it's $800. And then like with my house, when I bought my house, it was $1,200. So $400 a month or $400 a year is going to be, it's going to change my payment.
Yeah, nothing to sneeze at for sure.
Exactly.
That's true.
Yeah.
So that's true. Yeah, Josh hit on some couple good points there. Where your house sits determine what's called protection class. Okay, and that does impact rates. Age of the home, updates. You're trying to develop a replacement cost. What would take to actually replace that structure? All those factors go into deductible options. The list goes on, and having those conversations early on in the buying process can help people have some more concrete numbers when they get ready to go to that closing table.
Well, I know Jonathan, he does my insurance, and we just had a recalculation on mine because we had, of course, bought the house. We did all the renovations on the house, and then we did, and we did a massive amount of updates. So the house value went up because of those things. Right. And, we put a metal roof on. We put solar panels on our house. We did new flooring and took out walls and stuff like that. So he was like, well, let's get, a reevaluation because when we originally insured you, it was as it was, and now it's different. So, and then he helped me kind of figure out like what my deductible should be, this, so we could kind of balance out that difference.
Exactly. I mean, Josh, you hit it spot on. I mean, when you're looking at a property and you develop a replacement cost, as things change, as time goes on, I mean, you put significant money investment into that property, and we want to make sure it's protected properly too. in the case of a loss, certainly a total loss.
Yeah. Well, and especially with some people don't even think about that. Like I didn't really think about it till, me and Jonathan talk regularly. So
Right.
he was like, hey, so how many updates you done on the house? And I was like, well, we did a bunch. We put a roof on it, this and that.
Yeah.
He's like, yeah, we probably need to reevaluate. And I didn't think about it. I was, the only reason why it even crossed my mind was because of the solar. And I was like, this is a big add to the house.
Yeah.
And so for him, it was like, wow. So how many people don't think about that?
The majority.
Yeah.
The majority do. And, when we can educate and talk to a client, and that's what, we enjoy doing. Talking to them, obviously, if we can help them at Farm Bureau, we can. But the sooner that we can have those conversations, certainly to a new buyer, giving them the information that they'll need to best tackle the risk that they're undertaking, and then planting seeds that, hey, if life changes going forward or this property changes going forward, just having those conversations to keep everything as up to date as possible.
Yeah. Making some tweaks and adjustments.
Absolutely.
Because, you bought in the mid-3s. Your house is worth a lot more than that now with all the renovations. So
I think the estimated cost was like $550 or something.
yeah. So if if the house
did a
burned to the ground tomorrow, replacement cost of what you guys ran was still on the original.
I was $200,000 short.
It wouldn't have replaced it.
Yeah.
And that's Josh's situation or his example, is not unusual.
Yeah.
People buy homes, they update it, they add on all those things, and not having their insurance amount going to the back burner can cause less problems, let's say, come claim time to making sure that's updated.
Yeah, for sure.
Yeah.
So we've kind of touched base with the lender, the insurance, real estate agent super early.
Sure.
Now we're into houses. We've made some offers. We think we got the right one. We touch base with Jonathan again just to make sure, hey, I'm looking at 123 Main Street. Can you run some numbers real quick? I'm about to put in an offer. You get back to them. Hey, it looks like you're looking probably about this much as far as payment. We're under contract. That's when we go back to that binder that you're talking about. But it sounds like at that stage of the game, if a buyer has touched base with you a couple of times, we're not looking at any bad surprises once we hit that mark.
That's correct. Again, communication being the key, getting their information on the front end. Hey, we can run all the reports that we need to on the back end in regards to claims history, looking at insurance scores, those type things. You're right. We're avoiding any variables.
Yeah.
Right. And we don't want any surprises. We want the process to go as smoothly as possible to get to that closing table on time or before.
Yeah.
Actually, y'all had given me a referral, first time buyer here recently, right? Easily able to get to the closing table early, right?
Yeah, we did,
They
which
wanted
is rare.
They wanted to push that up.
Yeah, we moved it up.
We had all the information. They got into the house earlier than what they'd originally done. And us being able to be there and having all that ready, getting the efficiency back over to the lender.
Yeah.
I mean, they were very appreciative. They want to get in before Christmas.
Yeah.
Right.
Yeah.
And certainly a few weeks before Christmas
Right.
at that time.
Right.
Yeah.
Well, I just know in my connections with you, what we're looking for as far as partnerships, anybody that we're recommending, all of that is, one, I don't want a jerk sleazeball who's just trying to sell me something.
Yep.
And unfortunately, real estate and insurance and lending, man, is a high percentage of that.
Bad apples everywhere. Yeah.
Yeah. And then, but the second is, can somebody explain what is in a complicated process in layman's terms? And to me, that's one of the things you've impressed me on is, does this person have the heart of a teacher to walk somebody through, or are they just throwing a bunch of big terms that we're not sure what they are, and then they're like, here, just sign right here and you'll be fine?
That's right. That's right. We pride ourselves on face-to-face service, accessibility. One of the things that I've learned is if you call me or you text me, I'm going to try to get back to you that day. And the sooner, a lot of times if I'm able to answer the call then, definitely it's getting answered. Where you're not going to, when you have that problem, if we're the agent, you're not going to be calling a 1-800 number. You've got an individual cell number to call. There's significant value in that.
Yeah.
Can't overstate that enough. So thank you.
Yeah. Well,
I can totally vouch for that.
so if, let's just say theoretically, okay, somebody walks through the process, they get into their home, they've closed, they've lived in it a year or two.
Sure.
They have something come up in the house. They're like, we're not even sure if this is worthy of insurance. We don't know if this is a claim. Like, they just touch base with you. Hey, Jonathan, here's what's going on. Give me some wisdom.
Sure.
Okay.
Sure. We do that every day. Actually, earlier today, Josh had texted me. I said, hey, I'm on the phone with a claims adjuster right now.
Yeah.
Right? I mean, it's a very, very true thing that we deal with every day. A lot of times it's just asking a few questions. Tell me a little bit about what you got going on. Right? And if need be, we can kind of look behind the curtain per se. Warrants filing a claim, we can, and we're able to do that very quickly. We have in-house adjusters.
Okay.
They're actually Farm Bureau employees. Actually, to go a step further, Farm Bureau itself is based in North Carolina.
Oh, really?
North Carolina Farm Bureau is based in Raleigh.
Okay.
So it's North Carolinians helping other North Carolinians with their insurance needs and being here to serve them.
Yeah. Yeah, really cool. I mean, I know a lot of people, myself included, for years I've said insurance is insurance. Just they're all the same. It's kind of like the gas station, It's all the same gas, and so I'm just looking for the cheapest price. And the more I'm getting into it, the more I'm realizing, hey, that's not the case. You find somebody that's good at what they do what they say they're going to do on time, and bring a level of expertise without being pushy, all of a sudden you've got a huge value. And it sounds like everything, Farm Bureau is very competitive pricing-wise, but that customer service right there is just huge.
Well, we pride ourselves on that, and you bring up a valid point, Cameron. You talked about bad apples, or maybe somebody doing some things. We recently reviewed a file, a new buyer buying a home, looking at the competitive quote. They brought that in. We reviewed it. Pricing was a consideration.
Okay.
Right? Everybody wants to know what this is going to cost,
Sure.
what the premiums are going to be. When we started digging into it, some of the endorsements that the other carrier had quoted, or the agent had quoted, were what's called an actual cash value loss settlement on a roof, which factors depreciation is not full replacement cost. That is,
So it would not give them a new roof.
Would not be what you want.
Okay.
They'd also done that on contents on their personal property, okay, not replacement, as well as they had a much higher deductible than should have been approached in that size home. Right? They were unaware of that. But once we had a conversation, it reassured them that, hey, this is not what I'm thinking that I have. And that's not the thoughts that you want to have, or the realization that comes back when you have a claim.
Right.
Those conversations with insurance have to be had on the front end.
Right. People hate insurance till they need it, and then
That's
they love it.
Then they love it if they have what they should have.
That's right.
Have what they need.
And you don't want to find out in the end that you don't have what you want.
That's correct.
Yeah.
That makes a bad day even worse.
Yes, for sure. Well, do you have any kind of additional wisdom, any other thoughts in the process, anything else that you would add before we start to wrap it up here?
No, I would just say, having an open line of communication early, when you decide on a property, as you guys are helping folks in their buying and selling needs of insurance, of real estate, insurance should come up. And it should come up, and it should be a conversation that you have, because you are protecting one of, if not the biggest investments that somebody has. So don't shy away from it. Have a communication line opened early in the process, and then, make your choices going forward based on value, overall value.
Yeah.
And we're here to provide that as well.
That's good.
Yeah, very good. Awesome. Do you have anything else?
I don't think so. Kick it on.
All right. Well, we're going to wrap it up. Thanks for joining us on this special edition of The Buzz, and we'll look forward to seeing you next time. If you have any questions, you can post them in the comments below, and be sure and subscribe, hit that little bell, and we will see you next time.
Cool deal. See you guys.